Hi, this is Anthony. Welcome back to my show. Today I'm looking at some recent viewer comments that have been posted publicly to various financial related videos that I've done. Let's jump right in. This first one is actually from an acquaintance that I know, so I'm familiar with their background and situation. I think as far as residential real estate, for many people in America, buying a home and holding it long term will likely be a good investment for them, especially because they need some place to live. Now, there's many factors that play into the situation. Certainly, if the area is growing, then the value of the home may appreciate more than if it's located in a town that's becoming a ghost town. If you own your own place and you have a fixed rate mortgage, then you know how much your mortgage rate will be. But as someone who is about to pay for another year's worth of homeowners insurance, rates have gone up quite a bit. About 15 years ago, I had to put a new roof, which was very costly. A couple years ago, I had to have a new water heater installed, another costly item. From time to time, your refrigerator is going to die, or your washing machine, or your dryer. So besides fixed costs, there's a lot of variable and unknown costs to owning your own home. If you're a renter, obviously, your rent may go up in the future, perhaps dramatically in some areas. And if you have a responsive landlord, then when problems arise, things will get fixed in a reasonable amount of time. If you don't, then you may have problems with getting appliances repaired or replaced. Now, many people think that buying homes or apartments to rent as a business is a worthwhile investment. And obviously, in many cases, it is. But if you go into the business of that, you're just getting yourself into another job. I remember seeing infomercials years ago about people pushing a course on TV on how to buy investment real estate and only having to work 2 hours a month on it, with actors sitting at their dining room table with a smile on their face. Evidently, the 2 hours needed was simply to pay a few bills and to deposit the rental checks. Now, anybody that's actually owned real estate knows that it's a job that you either need to do yourself and do accurately, or else you have to hire a management company, which is probably going to charge you quite a bit of money to simply do the routine tasks that you would otherwise do, and anything beyond that they're going to charge you extra for. And again, just like your primary home depends on a number of factors, including where you're located, investing in rental properties can be affected by those same conditions. Plus, you have the added distraction of having to deal with renters who often may seem to be normal and undemanding when they apply to rent from you, but once they move in, they can show a different side. And what happens if we have a black swan event again, where we have another pandemic or some type of drastic shock to the economy, or we have a major earthquake in a certain area, and governmental leaders tell their renters that they don't have to pay their rent? And I can't tell you how many times I've heard from people, whether it's real estate investing experts on YouTube to real life people I know. Sometimes you have that great renter who stays in your place for 10 years and never causes problems, and then when they move out, you find that they've trashed the place, and you spend tens of thousands of dollars just to clean it up, clear out the junk, replace damaged wiring and plumbing, etc. So I'm not trying to talk anybody out of investing in such real estate if that's what they really want to do, but go into it knowing the risks and rewards. But any type of investment that you make really should be evaluated on risk and reward. I've mentioned some of the risks associated with rental properties. The reward, that is the amount of post-tax profit that you make, hopefully will be positive, that you'll have positive cash flow. But in many cases, in the end, you don't have that for a number of years, and investors say that they'll make it up in appreciation when they do go to sell. Obviously, in some cases that works, sometimes it doesn't. Let's look at a chart that compares Orange County, California housing versus nationwide trends of housing prices and stock market returns. As you can see, the general stock market outperforms nationwide housing appreciation by 100% per year on average. Again, those are averages, and people are rarely average or in an average situation. But let's look at a couple charts. The Spider S&P 500 ETF Trust, stock symbol SPY, has returned 12.76% annually over the past 10 years as of June 30th, 2023. This means that an investment of $100 in SPY on July 1st, 2013 would have grown to $227.60 by June 30th, 2023. The QQQ EFT Trust has returned 17.69% annually over the past 10 years. As of June 30th, 2023, this means that an investment of $100 in QQQQ in July 1st, 2013 would have grown to $470.90 by June 30th, 2023. And the Spider Industrial Average ETF Trust, DIA, has returned 11.65% annually over the past 10 years as of June 30th, 2023. This means that an investment of $100 in DIA on July 1st, 2013 would have grown to $349.50 by June 30th, 2023. And in each of these cases, you would have got some money from dividends, which is not reflected in the numbers given here. And if you have this money in a Roth retirement account, then it's growing tax-free with no effort on your part. Nobody calling you up in the middle of the night saying that they saw a rat. Nobody calling you up when you're in Hawaii on vacation saying that the smoke detector is going off and the battery needs changing and they can't reach it. Nobody saying that their rent is going to be late because they lost their job or their kid got sick or their boyfriend moved out on them or their car broke down and they need the money for car repairs or Christmas gifts or a whole host of other excuses that they think are entirely reasonable to pay for rather than paying for their rent. Now, of course, if you really want to invest in real estate, you could do so through a number of different types of real estate investment trusts, which trade just like stocks on the stock market, and you can buy and sell them all day long when the markets are open. These can be great ways to get exposure to real estate, but the problem with real estate at this point is that the pandemic, which fortunately is pretty much over, has shown us that we don't necessarily need to use real estate the way that we have in the past. And it's also showed us that when societal problems arise, that governmental leaders, in the quest to stay elected, will almost always side with renters against landlords. And certainly the trend towards online education and telemedicine can have an effect on the need for student housing in college towns, as well as the need for medical offices, at least to a certain degree. And certainly, many companies have realized that for certain employees, they don't necessarily need to have them working in an office, when working from home can be an entirely legitimate alternative. Now, certainly you hear many cases of business leaders wanting their people back in the office, and I think to keep people accountable as far as productivity or being able to engage in a certain way face-to-face in meetings, that might be appropriate. But I know a number of people who are schedulers for insurance companies, and there is absolutely no reason why they cannot continue working from their home. The software that they use keeps track of what they're doing and keeps them accountable, and so you don't need big office buildings to be filled with people like that could be working from home. So I just caution my viewers, if you're interested in buying a real estate investment trust, be sure that whatever sectors they target are ones that you believe going forward will continue to be profitable. And don't go chasing securities in this field that pay high dividends. Typically, the dividends are higher than the industry norm because the long-term trend of the security is going down, and eventually the dividend will be cut. Okay, I think that I'll end here as far as my comments on that question. Again, do some people make money in renting out real estate? Yes, some people do. Do people get really rich doing that? No. There's very few truly rich people who got there simply owning residential real estate. There are a few billionaires who started out in real estate, but then they created companies where they could leverage and get outside investors to invest with them, and they've made billions. But unless you're going to be doing that yourself, you're not becoming a billionaire from owning a handful of ranch-style houses in your neighborhood and renting them out to families. And as far as this time that we're in, not being a good time to be investing in stocks, I happen to disagree. And again, it comes with a couple caveats. You need to put your money in good stocks or mutual funds, and hopefully you have a long-term time horizon for your well-diversified portfolio. In previous videos, including this one that was referenced for in the question, I talk about individual stocks. Again, these are not ones that I'm recommending that you buy. simply recommending that you put on your radar and research the fundamentals of the companies if you're interested in them. And all of them are ones that I currently am invested in, and in all these cases, they are currently up from the prices that I bought in at. I'm just going to look at the year-to-date charts. Again, do your own research, but let's look at the S&P 500, up over 18% year-to-date. NASDAQ 100, up over 43% year-to-date. I mentioned Symbotic, stock symbol SYM, up 268% year-to-date. They make software and hardware for automated warehouses for companies like Walmart. It seems to me that's a no-brainer. DraftKings, a riskier bet, no pun intended. This is an online gambling company, up 178% year-to-date. IDEX Laboratories, which I've mentioned many times before, up a respectable 32% year-to-date. They make testing equipment and pharmaceuticals for the veterinary industry. Are people going to stop raising livestock and pets anytime soon? Probably not. And by the way, if you would have had the good fortune of buying them about 32 years ago, you'd be up nearly 57,000%. How about NVIDIA, which I keep on mentioning in my videos? Year to date, up 223%. And another stock, if you would have bought 22 years ago, you'd be up over 56,000%. Are people going to stop needing high-tech computer chips? I doubt it. Should NVIDIA be a good stock to hold for the long term? I can't predict the future, but what indicates that it shouldn't be? And remember, most stocks and indices were down last year, so the great gains of these stocks that have been made this year are coming off of what were probably unrealistic lows in many cases in 2022. Don't expect these companies' share prices to necessarily grow at the same rate for the rest of the year or on a yearly basis. Again, do your own research to see what long-term is reasonable for these companies' share prices to do. So I guess what I'm saying is that while the markets go up and down year to year, over the long term, broad-based market ETFs tend to rise over time. Good, well-managed companies in growing sectors should continue to do well. Buying and selling stocks are extremely easy, and most platforms no longer charge commissions. Now, I wouldn't recommend anybody to think that they can sit at home and day trade and make money consistently. But what I'm pointing out is that investing in a well-diversified portfolio of equities is much easier and less time-consuming than trying to operate residential and multifamily housing, and is generally much more profitable. But thank you very much for your comments. Now let's look at a couple other stocks. One of the companies that garners a lot of attention from my videos is a three-wheeled electric vehicle maker located in Eugene, Oregon, where I went to college. The company is called Arcimoto, and their ticker symbol is FUV, which stands for Fun Utility Vehicles. Their vehicles may be fun, but holding onto their stock, which I no longer hold any shares of, has not been fun for most investors. They were teetering on the brink of bankruptcy earlier this year and had to sell more shares to stay afloat at that time. And now it looks like they've had to sell even more shares recently. I don't know if their factory, which was shuttered earlier this year, is open again, but I assume that they have resumed making some vehicles. Here's a case that should remind people that good products do not necessarily make a good company. And a good idea might not necessarily make a good company or a good investment in a company. Electric vehicles may be the trend of the future. And by the way, I own some Tesla stock, and obviously I'm very happy with it. But manufacturing electric vehicles on a small scale in the state of Oregon is not necessarily an economically viable pursuit for a company. This is not cutting-edge technology. This is a motorized tricycle. People in lower-cost countries like China or India could easily create the same item and ship over here for much less than it can be made by Americans. And looking at the stock price, it's been a terrible investment. Yet I can't tell you how many comments I get from people that are holding on, not based on the fundamentals of the company, which have always been that they lost money, but holding on for hope. And hope is not a good strategy for investing. They like the idea of electric vehicles, so they think that the company will magically turn around at some point and their investment will become profitable. They use convoluted thinking like, These would be great vehicles to use for delivering pizzas. Now, their delivery vehicles start at $25,000. How many pizzas do you need to deliver just to make purchasing one of these make economic sense? Especially when you see that real-life pizza delivery people are either using a company-owned car or their own vehicle, which is probably a $3,000 used Ford Taurus. Again, I'm not suggesting people sell their holdings in Arcimoto because I'm not giving financial advice, but my advice for you is to think about what psychologically is causing you to hold on to such a disastrous security when you could have put the money that you have in Arcimoto into any one of these securities that I've previously mentioned and made from 30 to 250% on your money if you would have invested in early January 2023. Okay, I'm going to end here. Again, this is not financial advice. I'm not a financial advisor. I'm just trying to encourage you to make good financial decisions on your own after you've done your own research to hopefully create a well-diversified long-term portfolio. I'd love to hear from you on your thoughts that you have on what I've mentioned here. Do you own any residential real estate? What have your experiences been, positive or negative? Do you own any shares of these companies, or what are your thoughts on other companies? Any good investment ideas that you have? Leave them in the comment section. This channel is not yet monetized. I need a couple hundred more subscribers, so if you haven't subscribed, I sincerely ask you to hit that subscribe button. It doesn't cost you anything. You just have to click the button. If you like the video, I'd appreciate it if you click the like button, and please do comment. I can't really research every stock that people suggest, although I do read all comments eventually, and I try to respond to them when I can. Thanks again, and hope to see you soon.